Hi.
Wow.
Yeah.
Well, hello, everybody. This is really amazing. I am Rachel Stern, the new Chief Operating Officer of Barron Capital. It's been about 5 months, and they already got me on stage. Thank you. This is great. I should do it more often.
Yeah.
And I'm the newest member of our executive leadership team. And not just for me, but for Barron Capital, this is a moment. And it's a terrific moment because we have an opportunity that we haven't had before. We have a chance to chat with David and Michael Barron. You've seen them introduce sessions, you've seen them in investment panels, you've read their insights in the quarterly letters, but we've never really had a chance to sit and chat. So this is our time. I want to kick it off and say, Michael, can you tell us a little bit about your professional background and why you chose to come work at Barron?
Yeah. Exactly my thoughts. Interesting way to phrase it. Why did David and Michael Barron choose to work at Barron Capital? I think the way, at least everyone here might phrase it, is, did you guys even have a choice on coming here? So to be very clear, yes, I had a choice. We do still have free will, and it's something that I really want to do for a very long time. But much to my dad's credit, he made finance and investing and really our style of investing interesting and fun to learn about. Very similar to what we're trying to do with this conference. Make it interesting, make it transparent as possible. So I joined Barron Capital in 2004, but my education in terms of investing, or at least our style of investing, happened long before that. It really happened at home, at the dinner table. Our dad would come home and we'd just talk about our day. And we'd talk about school and he'd talk about work. He'd talk about the company that he was meeting, companies that he was investing in. And it was really never about stocks. People think, oh, you're in finance, you're talking about stocks. No, we talked about businesses. And it made, what made it our style of investment? What made this company our style of investment? What were its growth prospects? What was it trying to become over time? What made it unique and different that others couldn't do and replicate? And he spoke a lot about the people he was speaking with and meeting, and what attracted him to them and why he wanted to be in business with them. And that really, made it interesting to me. It really appealed to me. And somehow our family trips somehow revolved even around investing. I remember as a kid, we would, go and meet with people who actually spoke at this conference. Go to Kerzner International and talk to Butch and Saul Kerzner, or go over to Vail and meet with Anna Marin. Even as teenagers, I remember going up to Las Vegas and having lunch with Steve Wynn. So maybe that's in hindsight, that was his ploy. Make finance and make it interesting by taking two teenage boys to Las Vegas. I think that would make anything fun and interesting. So
that sounds a lot like Ron, something that he would do.
Definitely.
And it sounds a little bit of bribery, but a lot of fun. It sounds from everything you've described that you kind of learned about this business through osmosis.
No. Didn't mean to give that impression. Definitely was not osmosis. He took a very active role in it. Anyone who knows him realizes he doesn't leave much of a chance. So he took a very active role in ensuring that both David and I really understood our business, really understood our style of investing. And the way he did it was through essentially required reading. We wanted to make an investment. It was probably our bar mitzvah money, our first time we wanted to invest. And he said, okay, learn about the business, read its annual report, read what people are saying about it. The quarterly letters that we've been putting out every 3 months, we've been putting that out since I was a kid. That was required reading. Imagine being 12, 13 years old having this required reading. Really a lot of fun, but very important for us to understand the companies we're investing in and the portfolios that he was trying to create. So it definitely was not osmosis. It was a very active role in ensuring we understood the style of investing.
I can't even think about how different that was from my childhood. My dad was a mathematician, so we were definitely not reading anything that he was involved in. David, I'm imagining that you were subjected to the same kind of torture. What took you so long to join Barron Capital?
No, it definitely was not torture. I loved growing up with my dad and brother and talking shop and businesses and really figuring out how he analyzes companies. But I spent the first 3 years after college working on the South Side at Jeffries and Company for a really good gaming and lodging analyst on the street. And he really taught me about the business and what makes these casino companies, hotel companies different from one another, and how they allocate capital towards the highest uses, where they see the highest returns on their money, and really how to model these businesses, their earnings, cash flow, balance sheets. I mean, our Jeffries had the most detailed models on the street. I remember just sifting through these models late at night, just going through them during earnings season. That was a key differentiator for us. But what really differentiated us was with his contacts. He had the most amazing contacts. And I remember I was 22 years old, and I had the cell phone numbers of Sheldon Adelson and of Las Vegas Sands and Jim Urin of MGM Resorts, and they'd pick me up. They'd take my calls, and it was fun and interesting for me. So that was an experience, and I enjoyed it. But I soon realized that every time you made small changes to estimates or upgraded, downgraded stocks, it would have these huge impacts on the market, on these stocks. And I soon realized that all our hedge fund clients, they really cared about what was happening in the next quarter's earnings and what are these businesses were going to make or miss estimates. And it was a little too short-term thinking for me, and I really wanted to move away from being such a trader and more towards being long-term investing. So I joined Barron Capital in 2005.
I love hearing a little bit about your experience and your desire to move away from short-term to more of a long-term focus, and your thought process in choosing to join a firm with your name on it. So, but let's turn to something that's actually really important to us, and that is the sustainability, continuity, and continuation of our investment process, and also of our business. So, recently you and Michael, both of you, were elevated to the role of co-president. That seems like it was a very deliberate step. Do you have thoughts about that?
No, I mean, first of all, my dad's not going anywhere. He's totally still involved in the business. He loves what he does. He's passionate. He comes to work 5 days a week, and it's like his third kid. We have Michael and I and the business. But no, I mean, the fact that we have two people in specific roles is not anything new to Barron Capital. We have two chief investment officers, and Cliff and Angie that you just saw. We have co-PMs on a variety of products, assistant portfolio managers on a variety of products and strategies. And that's really to kind of have someone else know the portfolio and have someone an exchange of ideas and a new person to source ideas and have a difference of opinion. We don't want to have this group think, and we really want to be knowledgeable about these businesses, and having two people doing it is kind of a way to we've generated such strong returns over the past years. You want to continue that into the future, and we feel this will inure to the benefits of you guys, our clients, over time. And but what really differentiates us is our people. We have 215 really smart people who work with us every day, and they stay with us for their careers. We have 20 PMs who have been with us on average for 20 years, and I think that says something. That says that people really, one, they like coming to work every day. They like the people they work with, working with really smart guys, and they've really bought into our collaborative, long-term investment approach.
So, Michael, I'm curious, how do you think about your role as co-president, especially in light of the theme of this conference, which is building legacy?
Yeah, so when I think about legacy, I really think about the legacy of Barron Capital and what we're trying to achieve. And what I would love for Barron Capital's legacy to be is just to be viewed as the preeminent growth equity manager. And our historical record really puts us in that category. Look, we're not trying to do it all. We're not trying to be all things to all people. We're not getting into value or fixed income or maybe the hot asset class of the day like private credit. We want to do one thing extraordinarily well, and that's long-term growth equity investing. But in addition to what we do, I think it's important for us to be viewed differently in the industry. And that's in terms of how we treat our clients, being extraordinarily client-centric, giving as much transparency into these portfolios as possible, realizing at all times this is our clients' money, our clients' assets. We're working for them, and realizing that we want to show them exactly the companies that we're investing in, why we're investing in them, why we're constructing the portfolios in the way we're doing it.
So this focus on clients, almost like a client-obsessed view, that seems like it's a really important part of what we do in your,
Yeah, it is.
in your view.
It is, and even in this new role, I've been spending a little more time, speaking with clients and meeting with them. And one of the feedbacks I've gotten recently is you guys actually do what you say you're going to do. And they were surprised by that. And it was almost surprising to me to hear that, thinking it's simple. You do what you say you're going to do. And they find that so many people don't do that in this industry. They chase things. They pivot. They all of a sudden move to try to do something else. That's not who we are. We've been consistent through our 42 years, consistent investment philosophy and consistent investment process. And really not much changes here. As I think you saw in that earlier video, I didn't even know that video was going to play. It's the same thing year after year after year.
Same Ron, same corny jokes.
Same Ron, same corny jokes. But as a result of that, clients understand that markets are cyclical. There'll be good periods, there'll be tough periods. But if you have a consistent, repeatable process, you should be able to replicate our long-term successes over time.
So even though we're long-term oriented, we're still living in the now. How do we think about our investment philosophy in with the current business environment?
I think as Michael said, markets are definitely cyclical, and it has been a tough couple years for our small mid-cap equity portfolios. That's 65% of our assets under management today. But a lot of that was really due to higher interest rates and higher inflation. And we think now as rates come down, as inflation comes down, people will resort back towards these fundamentals. And as you heard before in the previous panels, that usually these small mid-cap stocks trade at premiums to large cap stocks, and now they're trading at discounts. And we think there's huge value in these stocks today, and valuations remain very attractive.
Yeah, I really agree with David. I think right now we're entering a very important time on the cyclicality aspect. That we should be able to do very well coming out of this. But we're also aware of the secular challenges that are going on in the industry. There's been a shift to passive. Intermediaries are culling the number of products on their platforms, and they're becoming increasingly more risk adverse. And there's been a mindset amongst investors to want instant gratification. And with us, we view a lot of these secular challenges as almost positives. Fewer active investors should lead to more investment opportunities for us. Or passive trading will create more valuation opportunities for us. And even the technology that's going on will allow us to offer our strategies in various appealing structures for our clients. And a lot of that conversation is really resonating in conversations I've had with clients. We're seeing more institutional traction, especially on the international side of things. We're seeing consultants approve more and more of our strategies, and advisors really wanting to have that conversation about how do we offer our strategies in a more tax advantageous structure.
I'm so excited to hear you talk about these different types of strategies, vehicles, wrappers that I know I'm excited to start thinking about in terms of the strategy for our company, because these are ways that we can deliver terrific opportunities to our clients. Mutual funds are fantastic, but there are other things out there.
Yeah, mutual funds are great. They get a lot of bad rap. People talk about mutual funds as they're going away. The mutual fund is an incredible wrapper for many structures, especially in our smaller, more illiquid strategies. So it's not going away. We're just thinking about what else we can do, and that's one of the positives about being a boutique asset manager. That since we're not trying to be all things to all people, not trying to chase, we're able to figure out ways that we can offer our investment strategies beyond the mutual fund, keeping the mutual fund strong, and offering in more ways for our clients.
So you're saying we can have mutual funds and other things, sort of like you can have 2 kids and love them both? That kind of...
That's my parents tell me, apparently.
Well, this has been, for me, really fun. I hope it's been interesting and enlightening for all of you. We could stay here and chat all afternoon. There's a lot more on the schedule, though, for today. We're very excited about it. So hang on. And we will be back later at the very end to answer.
We were just told we're up for Q&A. So.
Yeah, we're going to be answering some questions that have come into the conference mailbox. So I'm not sure what we'll get, but
Lucky us.
we'll deal with it. Yeah. Thank you all so much for your time.